Is Twitter about to be changed drastically by the same man who radically changed the automotive and space industries? Let's start the countdown and find out. Welcome back to the Investor Place Launchpad, where we take a look at trending investment ideas and try to rocket them to the moon. I'm Head of Mission Control Aaron Davis, and we are back after a week off, and what a week it was with Tesla and SpaceX founder Elon Musk making waves in the Twitterverse. As always, before we dive in, we'd love to continue to grow our channel here at Investor Place, so feel free to hit that like and subscribe button and smash that notification bell to stay up to date with us here at the Launchpad. With all of that out of the way, let's dive right in as to what's going on with Musk, Twitter, and see where it might take us. The name Elon Musk is no stranger to the Launchpad, as we've covered both Tesla and SpaceX in the past. The Pretoria born and raised wealthiest man in the world has an estimated net worth of $273 billion. Musk has quite the reputation with successes in tech and business, most notably SpaceX and Tesla, as well as being a vocal advocate on a range of different issues, ranging from cryptocurrency to artificial intelligence. Last week saw an announcement that Musk would be joining Twitter's board of directors after quietly buying up 9.1% of Twitter's stake, making him the company's largest stakeholder. Musk has recently been vocal about various concerns on the social media platform, ironically using the platform itself to voice said concerns. However, Monday morning saw this story take a different turn, as Musk has turned down the invitation to join the board. One of the stipulations of Musk's seat at the table was that he could not buy up more than 14.9% of Twitter's shares. In Musk's declination, the stipulation no longer applies, allowing Musk to potentially buy out the company in what some speculate could lead to a hostile takeover. As Dan Ives, a Wedbush analyst who covers Tesla, puts it, this now goes from a Cinderella story with Musk joining the Twitter board to likely a Game of Thrones battle between Musk and Twitter. This puts Twitter in a complicated position, as the company does not have dual share classes, a protection that leaves voting rights with a company's founders. Last week saw shares up more than 25% after Musk's announcement of his 9.1% stake in the company. This amounts to 73.1 million shares, worth roughly $2.9 billion based on last week's closing price. Last month saw hints that Musk was becoming increasingly invested in the practices of Twitter, which as a company has been trying to increase revenue through a variety of new initiatives, none of which have been categorically successful. These initiatives range from Twitter Blue, a paid version of Twitter costing $3.50 a month, a collaboration feature allowing users to co-author tweets, and potentially allowing celebrities to bring their own ads to the platform, sharing revenue with the site. Ultimately, Musk seems to see a variety of flaws amongst these initiatives, while seemingly still advocating for the power of the platform itself. With 81.3 million followers, Musk's reach spans to an audience equivalent to approximately a quarter of the US population. Yet it seems that issues of censorship and free speech are what's driving Musk. As last month, Musk tweeted the following poll stating, "Free speech is essential to a functioning democracy. Do you believe Twitter rigorously adheres to this principle?" With 70.4% of participants voting no, it seems that this was the likely catalyst to Musk's beginning of buying up shares of Twitter. Ultimately, where does this leave investors? Is Twitter stock a buy right now? Investor Place assistant news writer Eddie Pan looked early last week at what some of the initial speculation among Wall Street analysts had to say. For a full breakdown, you can head on over to investorplace.com, but Pan collated the following. As of last week, Bank of America had a target price of $54, MKM Partners had a target price of $49, and Jefferies had a target price of $48. However, this was all before Musk declined his seat on the board of directors. Regardless of Musk's opinions and demands for the platform moving forward, IP contributor Dana Blankenhorn suggests that despite all the news and hype around Musk's acquisition of shares and subsequent decline of its spot on the board, that none of this reporting is as to whether or not it makes sense to buy beyond the hype. Blankenhorn examines the $1.35 billion the company lost over the pandemic and suggests that the company doesn't make money regardless of political direction. Blankenhorn suggests, if I owned Twitter stock, I'd sell it. It's far beyond its fundamental value. The company doesn't make money. No matter which political direction it goes in, it's going to anger people. The issue of online speech has been a bugbear since I came online in 1985. Governments insist on limits. Each government's limit is different, and content moderation has become an industry. On a global network, it's a square you can't circle. Forget the noise. If you're interested in profit, Twitter is not the droid you're looking for. Twitter gives people a voice and a platform from which to share ideas and viewpoints. While only Musk knows his true intentions behind getting behind that voice, it's clear that he undoubtedly has the money to do so. But What do you think? Will Musk change the Twitterverse for the better? Is Twitter still a relevant platform? Is Twitter an investment worthwhile? We'd love to hear your thoughts in the comments section below. Well, that's all we have from the Launchpad this week. If you'd like more insights like this and both Eddie Pan and Dana Blankenhorn's full breakdowns of Twitter and Musk, head on over to investorplace.com where we release articles daily. And as always, check back with us here at the Launchpad where we will continue to look for trends like Musk and Twitter. And as always, try to shoot for the moon.